All right, morning everyone. Let's get it going. All right. Friday session in U.S. equities is a bit choppy to say the least. You can see there just kind of a bouncing back and forth. I think what's really important is to note the volumes. Just probably one of the 4 or 5 lightest days of the year actually on Friday. And so we were seeing some big rips around in the European indexes, and I think it was probably the same sort of thing there. I think market's just very thin, and so it was a little bit easy to get a couple quick backs and forth. Our partner in New York told us that 80% of their trading desk was away on Friday. I think they're maybe just trying to catch up soak up the final rays of summer there, and probably the same sort of thing in Europe for all the kids and everything go back to school and that sort of story. So just keep that in mind. That's obviously the reason why we had such kind of a random choppy trade on Friday. Markets were under pressure a little bit out of Europe, but the States managed to kind of hang on to basically a flat line. NASDAQ actually managing to inch up again on the day. The big news obviously on Friday was out of Jackson Hole with the speeches from Janet Yellen and Mario Draghi. And Europe throwing the kind of we'll do whatever it takes scenario on the table again. Has futures bid up a little bit this morning. The S&P futures up 9 points. Outside of that, very little going on. We have had things that have continued to intensify out of Russia and the Ukraine. It's interesting because it hasn't really factored in whatsoever to certain markets that you would have thought it would have factored into. The energy markets have actually sold off over the last couple of weeks, and they've sold off hard, or you would have thought that would have had the opposite effect. And the gold market also has gone much softer, and you would have expected the same manner. So I think it's I don't know if the market just doesn't believe that it's actually going to ever escalate, or if they just don't care. So interesting nonetheless. All right, let's move into the Asian session overnight. You can see there we had a bit of a mixed session, actually quite soft. Looking at what's looking at the U.S. future open at the moment. The Nikkei managed to trade really well on the session, but I think that was more because of the weakness in the yen. I can show you that chart again in a second. We looked at it on Friday, the yen, or on Thursday last week, I believe. The yen's just breaking out here. I think, it's more the dollar breaking out against the yen, and the dollar strength across the board has really been telling over the last little bit. As I speak, we've just dropped the 132 handle on the euro. First time we've been down through that sort of level in about 9 months, I believe. And it's happening against all the crosses at the moment. And the dollar's really starting to get stronger, where the rest of the world, the data continues to show softness at best, and the U.S. data continues to come out very solid. And obviously, people starting to factor in that U.S. will be the first one to really raise rates. If it comes to that, while some of the other economies potentially like Europe could be doing more stimulus. Other than that, we had some of the miners that corrected a little bit, I think, on the back of Friday's action in Europe. So other than that, this morning, I think there's very little to really pay attention to out of Asia. All right, interesting little chart here, and kind of goes in line with what we talked about in the in the Eurozone, and that's a chart out of the unemployment rate in the U.S. and the blue line since 2008, and Europe as the red line since 2008. And you can see there, we've hardly even started to make up any jobs in the euro area. In fact, obviously, unemployment rate continued to escalate until as recently as last year. We've clawed back a handful of jobs this year, but that's basically it. The bottom line is, obviously, if the markets start to weaken, if global economies start to weaken again, imagine where the unemployment rate in Europe's going to go. It's still a very, very poor picture there, and that's exactly what Mario Draghi's talking about, and the reason why they're looking to throw pretty much anything at it at the moment. All right. Corporate action today. We got Sun International that's going to release full year numbers, so keep an eye out for that. Headline earnings per share expected at 7.14, revenues expected at 10.7, and divvy per share expected at 180. We've got MTN going ex-div at 4.45, so don't think you're getting a special price this morning on the open. Just keep that in mind. Don't get caught in that one. And a lot of market data out this week. This is going to be a really, really important week for market data. Today, we don't have as many important, well, we've got quite a few important numbers today, but it kind of picks up throughout the week. So we've got PPI starting in Spain. We've got the IFO numbers out of Germany, which have been really big market movers of late. We've talked about that. Then the States, we've got a slew of data this afternoon. We've got the Chicago Fed. We've got market composite PMI and services PMI. We're going to have services PMI numbers, if I'm not mistaken, pretty much across the globe. So that'll be interesting as the week goes on. We've also got new home sales in the States and the Dallas Fed manufacturing. A lot of stuff like durable goods. We're going to see non-farm payrolls at the end of the week. So a really big week for data coming out this week. All right, let's get into the maps. First thing that we're going to have a look at here is Impala. So I'm going to take this forward a little bit here. Obviously, you know the downtrend that we've kind of been in. I mean, look at how symmetrical this downtrend's been. It's been incredible. You can see there we've really just kind of stayed in this band for 4 months now, as you can see there, and haven't entered outside this little band. We're starting to get down to the bottom end of the band, and so that's one of the things that I wanted to point out. I think we did kind of test it on Friday. We'll see if it can push lower. We came down and traded maybe a couple cents south of 100, which we've been calling for a long time here. It's been hard to hang on to it because the bounces have actually been pretty vicious. At times you can see here the range moving between sort of 103, 110, that sort of level. Bottom line is we dropped this 103 level 2 sessions ago, and I think we're going to have to see how it plays around 100. Actually, the target on this is definitely lower than 100. The target's probably down closer to 95 on the short term, and longer term it's even lower than that. But we'll have to see how it plays out. Just keep an eye on that. If we drop 100 today, obviously it's a significant number in terms of just being the big round number. Those sort of numbers drop. A lot of times it can be targets, that can be stops, that can be all of the triggers, that can be all those sorts of things. So keep that in mind today. If we drop 100 and can hold below it for a little while and push away from it, in particular, I think we can move to 95 rather quickly in Impala. All right. The focus, I guess, today, you could say, would be the iron ore stocks, which have really started to drop some significant levels in the last few sessions. You can see here the first one we're looking at is Azure, and you can see we've dropped convincingly support that was at 330, 331. We traded down to as low as 323. It actually dropped on Thursday late, but only narrowly. And then I think we got the proof on Friday. We really pushed down hard. In fact, we bounced hard into the close. I think we closed up a little bit, closed pretty much every stock on the board up on Friday's auction. But bottom line is we ripped through this level. We closed $8 below it, and I think we've got a big downside target here in Azure potentially. We'll look at, that's the wrong one. We'll look at ARI, which you can see also same sort of company play. Around 185 there, you can see major support. You can look at all the consolidation. We kind of had a bit of a broadening formation maybe off the 185 level, if you want to draw it that way. But the real consolidation, the meat of the consolidation has taken place between 185 and 195. That opens the door very quickly for maybe a 10 rand downside target down to around 175 in ARI. And continuing on in the iron ore theme, you can see here that Kumba really dropped support. Obviously, a few sessions ago, we've kind of been, if you narrow this out to a 30-day chart or shorten it up to a 30-day chart, you can really see here that the 335 level is quite significant. 340 is a 335 level is quite significant. And I think we need to really drop there and push away from there. We dropped it by a hair on Friday. We have to wait and see that play out a little bit. But bottom line is major level here. I think we got to see that drop for us to really get the continuation, the next leg down, which can take us down to about 300 potentially. Also on the iron ore side, or at least it's the biggest component of the iron ore side. You can see Billy's. Billy's obviously has dropped hard over the last few sessions, probably more so than anything on the back of the lack of the buyback. But what I also wanted to show here is that Billy's is kind of front run the others, I think, because of the earnings, because they didn't announce a buyback. It dropped harder. You can see how hard the one-day drop was there. Of 5+%, dropped out of the head and shoulder, but the target was right down here. It was at 341 for our target, I believe, on the drop in the head and shoulders, and there's also some support which comes in a touch above that, which is right around that 343 level. I actually think it might not be a terrible idea to pair one of these things up, to have a nibble on some Billitons, potentially selling one of the others. Could be an interesting little play here, but Billy's coming into some support. We'll have to see how it hangs on as we come into support in Billy's. And then the last one that we're going to talk about is away from the iron ore space, which is Astral Foods. And you can see here, this is incredibly wiki, but you can see we've really broken out. If I zoom it forward a little bit, it's hard to tell because Friday's green bar, you can see obviously we close, new closing high, breaking out a little bit there above, a bit of a resistance level at around 146, if I'm not mistaken. 147, sorry, and upside target probably through to about 152 odd in Astral Foods. And that's it for today, guys. Good luck out there. Could be another interesting one.